If you're an investor following Lonza, their 2025 performance was, well, it was a big one. We're talking huge numbers and even bigger strategic moves that are really setting a new course for the company. So let's break it down, right? Let's get into what actually happened and what it all means going forward. Okay, let's just start with the headline number, the one that tells you pretty much everything you need to know. A massive 21.7% jump in sales. And look, that's not just a good number. It's the kind of number that tells you the core business is absolutely firing on all cylinders. But when you see a number that big, you've got to ask, where is all that growth coming from? So here's how we're going to break it down. First, we'll look at the big picture of this standout year. Then we'll dig into the real engines of that growth. After that, we'll talk about a major strategy shift. And finally, we'll look ahead to 2026. All right, first up, the big picture for 2025. Let's get past the headline numbers and really understand the story of the year. You know, sometimes the CEO's own words really say it best. Wolfgang Wienand called it a strong year with significant revenue growth and expanding profitability. And that's the key phrase right there, expanding profitability. It's not just about getting bigger, it's about getting better. And he also mentioned a transformation journey. That theme is going to be central to everything we talk about today. And here are the numbers that back up that story. Sales jumped to 6.5 billion Swiss francs. But here's what really matters to an investor. Look at the core EBITDA. That's a key measure of profitability, and it grew even faster than sales. What does that mean? It means their profit margin got bigger. They didn't just sell more, they made more money on every sale. That is a fantastic sign of a healthy, well-run business. Okay, so we know the what. The numbers were great, but now for the how. What exactly powered this performance? Let's dig into the real engines of growth. And before we go any further, I just want to clarify that term, core EBITDA. Think of it like this. It's the company's pure operational profit. It takes out all the one-off, weird stuff like restructuring costs, so you get a really clean look at how the actual day-to-day business is performing. It's the number that shows the true health of the operations. Okay, now this is where it gets really interesting. When you break down the growth, you see two absolute powerhouses. Advanced synthesis was up over 22%, which is great. But then you see integrated biologics. Wow, a staggering 32.2% growth. That's just on another level. So you have to ask, what on earth happened there? And here's your answer. A massive piece of that puzzle was the acquisition of a huge facility in Vacaville, California. And the key word here isn't just acquisition, it's successful integration. Buying something is one thing. Making it work is a whole different ballgame. And just look at the scale of this thing. That one facility, added about 600 million Swiss francs in sales in its first year. That's not just a small boost, that is a genuine game changer. An acquisition that started paying off immediately. And again, this wasn't just about buying a revenue stream. They nailed the execution. The post-merger integration was seamless. They passed their first FDA audit under Lonza's ownership, which is a huge deal. They did their first tech transfer of a new product. And maybe most importantly, they've already locked in 5 big commercial contracts. This thing isn't just up and running, it's absolutely thriving. You know, that success at Vacaville, it's not just an isolated event. It's actually part of a much bigger strategic picture. So let's talk about that now, how the company is sharpening its focus with its One Lonza strategy. Okay, so this was the single biggest strategic move of the year. They decided to sell off their capsules and health ingredients business, or CHI. And why would they do that? The goal was to become what's called a pure-play CDMO. That stands for Contract Development and Manufacturing Organization. Basically, they want to focus 100% on what they do best, high-end manufacturing for the pharmaceutical and biotech industries. Now, this brings up a little bit of accounting jargon you'll see in the reports, discontinued operations. It's pretty simple, actually. It just means that the CHI business is now reported separately. It's kind of cordoned off. So all those amazing growth numbers we've been looking at, that's all from Lonza's core continuing business, the part they're keeping and doubling down on. And this is such a key point for investors to understand. They weren't just getting rid of a problem child. The CHI business was actually growing, a respectable 4.4%. But the decision to sell wasn't about weakness, it was about strategy. It was a choice to double down on the core CDMO business, which has much higher growth and better profit margins. It's all about focus, focus, focus.
So let's recap. We've got a standout year, incredible execution, and a brand new, sharper strategy. That brings us to the big question, right? What does this all mean for investors looking ahead to 2026?
Well, if you want a clear signal from management about how they feel, look no further. A proposed 25% hike in the dividend. That's a big number. And for any investor, a dividend increase like that speaks volumes. It's not just about the money in your pocket, though. That's nice. It's a huge vote of confidence from the board. It's them basically shouting from the rooftops that they are incredibly optimistic about future earnings and cash flow. And that confidence isn't just talk. It's backed up by their official guidance for 2026. They're telling the market to expect another year of double-digit sales growth, between 11 and 12%. And just like we saw this year, they expect profitability to get even better, with that core EBITDA margin climbing above 32%. So that leaves us with the big question moving forward. Lonza has streamlined its business, they've successfully integrated a huge new asset, and the momentum is clearly on their side. The real question for any investor is, can they keep this up? Can they keep delivering on this ambitious growth model, especially when you consider how volatile the global economy is right now? This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.